Welcome back, everybody. Yesterday we had tested our market selection process on AutoCAD. We proved that we've got a pretty stable way of finding good market selection, and we assigned a context score to AutoCAD, which meant that for now it's not going to be a market of interest for us at the moment. So we're going to run through another market, hoping that we can run through our primary analysis part of the system and hope for further refinement over there. So let us go with EURUSD. I get the feeling that this market might have a good context score, which can help us actually hopefully get to primary analysis. But we're going to follow the exact steps of market selection before we can get to that conclusion. Okay, so today I'm working with one screen, guys. So I'm going to jump between the market and my system. But this will also help you guys see me follow everything step by step. Okay, so 3.1.1. We're going to map out the medium-term structures using the path tool on TradingView. Happy days. We're going to start on the weekly chart. Let's go. Okay. Let us select the path tool. Here we go. It doesn't really make sense for us to start all the way back here, so I'm going to start from here. Boom, 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 boom. Let's go boom, 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 boom. I'm going to count this all as a wave, get a nice pullback here. One wave, get a deep pullback here, now moving up. Okay. So first step done. Next step, make a comment about the structure characteristics and include the screenshot in Notion. I'm going to actually get rid of this part to say include a screenshot in Notion, because we're only going to put it in Notion if we have a context score that's greater than 7. Cool. Let's see what we have here. You can see we're obviously in an uptrend. The length of the most recent wave up is not as strong, but we can see the depth of pullback has not been too deep. So overall, we can say that we've got some pretty strong bullish structure characteristics. So we'll come here and say the length of the bullish, slightly, the length of the most recent bullish structure slightly shorter than the previous one, but overall we are in an uptrend with shallower pullbacks compared to some of the deeper pullbacks we saw in the deeper pullback rates we saw previously. Okay, so overall we are in bullish territory. Happy with that. Cool. Select all the data on the chart, make them visible on the current time frame, and hide them so we can do step 3.2. Select all of this and visible on current interval, and we're gonna hide them. Fantastic. Now we're gonna head over to 3.2, which is all about the significant levels. Alrighty, we've got our checklist out. Now we're gonna start by identifying some very simple swing high-lows. Gonna put them here. And we're gonna take some over here. Plug them there. Select, hold in the control button and drag it across. There we go. Yep, this gap's up here, so this is probably the right way to map the swing. Fantastic. This is probably right. Oh. So what I'm doing is I'm just looking left to see what's the most appropriate way of mapping the swing. But judging, none of these mappings shows us any sign of reaction in the past. So I'm just going to keep it at the body of the candle, seeing that we've had an interaction here already. But in future, we're just going to note that there's alternate mappings to the swing. And even as we break out of it, we might be in a situation where the alternate mappings gives us two different parts of resistance, which would decrease the dependability. Already, I can tell is for us to break out of this alternate mapping and retest it from the other side. That's probably going to be the best for this market. Cool. Let's see, we've got, oh my god. This control function on TradingView can be so frustrating. There we go. Oh, the swing is beautiful. Can you see? There's all this room for euro to be attracted to the upside. Oh, this is beautiful. This is very beautiful for euro. There's also some swings way up here. Yeah, this market is beautiful, I'm telling you guys. And when we look to the left as well, we can see the swing is really good. So I just want to select all of these and make them visible on the current time frame. Happiness. So swing high lows, I think we're happy with all the relevant swing high lows. Now we're going to look for reverse. So starting to feel like we probably should have mapped some of the historic um, parts here, because we can see we're going quite far back to understand the parts of resistance. So what I'm gonna do is actually add to the path. I'm gonna go like from here. Seems about right. Probably doesn't change my conclusion much, because we can see we had some upside structure which got broken here, then we had a whole downward trend, then we started this uptrend, deeper pullback, uptrend, very deep pullback, then we had the strengthening structure characteristics. So it ultimately doesn't change the conclusion of the structure characteristics. Cool. Let's see, do we have any reversal zones? So for reversal zones, if we come back to the system as well, do we have a wiki area or an area of the chart that causes a shift in activity? Yeah, we would honestly be forcing here. If I was to take the rectangle tool and see if we could map something out here, it's like we are forcing the situation. We have enough information from the swing right here, which is also more precise. It doesn't really make sense for us to use a reversal zone. Maybe if I move it down here, nah. But maybe this zone doesn't look too bad. Let me hide the path. Let's see if we dragged it further back, maybe. No, further back it's not relevant. This is actually not such a bad zone, because I mean we get breaks with momentum here. We test it here and we get a reaction, but then we break out of it with not that much momentum, then we test it again. So I think we're seeing enough signs that this is actually not a reversal zone. We're going to rely on the swing, which is more accurate, but also the swing has alternate mappings for us to be aware of. Can you see? It could be mapped like this, but because of this long wick, I'm actually more comfortable to map it down here. I'm just curious to see how this looks on the daily. Yeah, you see, on the daily we would want it to come back to the low of the wick and not to the body because of how long the wick is. Yeah. Alrighty. Okay, reversal zone done. Now let's see if we have any supply and demand zones that we can map. Looking here at the back, no, there's nothing here. Nothing here. Maybe down here there could be a supply and demand zone, but it's going to be so irrelevant for us. Like price coming down here, the context would have shifted so much. Cool, we have this. Happy. Okay, happy. No supply and demand zone. Do we have Fibonacci's? Oh, that's not what I'm looking for. I'm looking for the Fibonacci retracement. Okay, we just get a We just get an interaction with the 38.2 here with a little bit of tolerance. Just curious to see some alternate mappings, maybe. No, okay. It has to be up here for us to get any kind of interaction with the 38.2, and I think this is the best we get. What's nice about this is that we get an interaction with the B point before we break out. What's nice is that we don't break back into the range on the weekly here. So, price could be attracted to the 0.272, which unfortunately doesn't coincide with any other significant level in terms of its dependability. But the mere fact that price has some attraction higher towards this level would be quite an attractive situation. Would we want to trade a retracement back down here if we hit it up here? Probably not. Okay. Happy with that Fibonacci. Let's see if we get another Fibonacci here. Okay, I'm just gonna hide this Fibonacci so that I don't get confused. Let's see, do we have confluence? No confluence. Nope. Yeah, we've got all these different Fibonacci's now, which makes the overall situation a lot trickier. But that's fine. I think the fact is, even if we're being prudent, potential to be attracted to this Fibonacci, which is 226 pips above, what we would be hoping for is some kind of a break and retest of the swing before we get to these levels, you see. So there might still be opportunity here. There might still be opportunity. Okay. Fibonacci, done. Trend lines. Do we have any trend lines? Ooh, that's a nice trend line. That's a very nice trend line. Very, very, very nice and precise. We literally get a type 2 and then we get a type 1 and we get the reactions we're looking for. So a break and retest of this trend line would be quite the situation, although we can see quite a gap between the third and the fourth interaction. But I would say we've renewed the life cycle, so to speak. I know trend lines don't really work with life cycles the way swing high lows do, but the mere fact that we're seeing these very precise reactions now tells me that this trend line is still active, and we would be more than happy to look for breaks and retest of it. More than happy. It might look like I have a background filter, but I'm on vacation, guys, and this is my home for the next couple of days. I don't know, maybe the thought of like having to carry the camera, but I'll see if I can show you guys around the place a little bit, especially the views outside. It's fantastic. Anyway, let's get back to work. Okay, we've got the trend line down. There could be a trend line over here, but it's unlikely to be relevant for us, so we're going to delete it. Yeah, those are the only trend lines that seem to be appropriate here. There could be a steep one over here. Okay, trend line done, and that's it for all the significant. So cool. 3.2.7. If price is interacting with or is near a path of resistance, then make a comment on the strength and dependability of the levels. Ask yourself the following questions. Set alerts for when price is near path of resistance so we can assess strength and dependability for the context. Let me put that at the end here. Do we need to address the strength and dependability of these things yet? I don't think so. I don't think so. Could we be looking for shorts here? I don't think so, man. Considering the most recent interactions as well, it seems like this market wants to break out. Could we get some asymmetric situations for short trade? I mean, for sure. That's definitely possible, but I think with the structure characteristics being bullish and the weak strength of these reactions, I think we'd be wanting to, I hate to call it a bias, but would probably be wanting to be on this on the long side of the situation. Okay. Current interval only. We are done with the weekly chart. Let's head over to the daily. See how much time that took for us to just do one time frame. It's shocking. Okay, repeat the steps on the daily. Cool. What can we see here? Obviously, in an upside, we had this deeper pullback here. We had this one deeper pullback here. So I'll say here, deeper pullback. Interval only. Okay. Hide. Now we're going to go into significant levels. Cross magnesium. That's nice. Very difficult to know which trend line mapping is appropriate, but because these waves are closer to each other, I'm actually going to get rid of this one and keep it like this. Okay. Okay. So trend lines are done, swing high low is done, reversal zone, there's no reversal zone here. Supply and demand zones. This one could be one, but we don't get a bullish close. But with a bit of tolerance, let's just see how it looks. Yeah. I mean, technically then this isn't set up, but I think the structure characteristics we're seeing probably doesn't favor this, although remember we're trying to find positive expectancy opportunities. But yeah, this just doesn't really feel right. It really doesn't feel right. Also understanding why this move down here happened. If I can go to USD JPY and go back to the 28th of July. The 28th of July. 28th of July. I think this is when we had that shock. PPI release. I'm just going to confirm on the Edge Finder tool. You see, this is where we're getting into the crux of following the Duomo method, because now I can't just mapping a supply and demand zone where the move happened because of information into the market doesn't really make sense, because chances are there were not that many positions accumulated the day before the information was released, unless the institutional traders actually had access to that data before the release. I just want to see if I click on economic heat map. This tool is great for just tracking macro or fundamental data. So we're trying to look at the 28th of July, under the 28th of July. This must have been some kind of. Let me just go to investing.com and see what news was released on the 28th of July. Here, I'm gonna go to the 28th. I need to find out what was the cause of this huge down move on the 28th of July to understand if there's a genuine accumulation of positions or not. I'm just going to make a note of it here. I'll keep it on the chart. The reason oh Jesus. So if we can understand the reason here, we can know if positions are actually being defended here, or if we have a greater likelihood of actually just exploding past it. Because currently you could say we're in setup and there could be an asymmetric situation for downward continuation. Now we're on this time frame and we shouldn't be, but this whole situation still looks quite unattractive. And would you look at that, the accumulation happened over the weekend. There was some kind of a change in fundamentals that happened over the weekend to cause this move. It's obvious. Just don't know what it is. I'm gonna ask ChatGPT and see if it knows anything. Okay, I have a question regarding Euro USD.
Sure.
On the 20. Hello.
Hey there. It seems like you got cut off a bit. No worries. Take your time. Let me know what your question about Euro USD is, and I'll do my best to help.
So on the 28th of July, Monday the 28th of July, the currency got quite weaker against obviously the US dollar since it's the Euro USD. And it seemed like there was some kind of a fundamental shift that happened over that weekend to cause the shift lower so early on Monday that kind of continued through Monday and Tuesday. Do we know the reason behind that move?
Yes, on July 28, 2025, the euro weakened against the US dollar due to a significant trade agreement between the US and the EU. The agreement introduced a 15% tariff on most EU imports, which caused some uncertainty. Additionally, the EU committed to a substantial amount of energy imports from the US over the next 3 years, which raised concerns about Europe's economic outlook and contributed to the euro's decline.
Okay, so it was all because of trade policy or tariff policies, essentially.
Exactly. It was primarily driven by that shift in trade policy, and it shows how interconnected global markets are. Even a single agreement or policy change can have a pretty significant impact on currency values. If you have any more, you're very
Question. So I'm gonna say here. Okay, and for that reason, I'm gonna delete this. I'm gonna say here current intervals only. Fantastic. Okay, so we've done all of this. We are not near the price for us to assess the strength and dependability, but now I need to assign a context score. I don't think this market is really that favorable, to be honest. Like, we're still in between highs and lows. So any breaks and retests of this can be very risky. So can you see? Boom, we're inside. Although we're not necessarily in a range, but we are gonna want to find ourselves in a situation where we either come back to this unconfirmed trend line, possibly even coinciding with this swing, and then looking for longs, or a break and retest. So for now, I'm gonna apply a context score of 6. Let's say context score 6. We are inside. We need to come to unconfirmed trend line and possibly swing or break and retest swing above. Great. And what I'll do is I'll set alerts for us to assess the situation. Let's put it around here. And then we're going to say here, unconfirmed trend line. On daily. And then we're going to set another alert here to say break and retest above. Cool. This is good, guys. We have a context score of 6. We know exactly what we're looking for to be interested. The break and retest on the daily might also coincide with this break and retest on the weekly trend line, which is very promising. So yeah, I think we are done with this market. Again, we still have only done the market selection process. It's funny how with delayed judgment you can actually conclude accordingly how strong the context is. So after assessing everything in detail, that this market's actually not ready at the moment to be assessed on lower time frames further. So context scores that are 6 and below will not be considered for market selection and would therefore move to a new market. Some instances may warrant us revisiting the context once parts of resistance are interacted with, and that's where those alerts will come into place. Cool. So this will be testing market selection on EURUSD. Cheers. Let me show you guys some views before we conclude this video. What I should probably do is make the screen a lot bigger so you guys can see what's happening here. Okay, I'm blocking the screen, but just check out the views here, guys. Holy moly. So yeah, see you guys tomorrow.